The personal financial statement is something that you must do as often as you need to whenever anything changes in your life financially. You need to do a personal financial statement because it is what tells you how you need to proceed. If you don't know what your personal financial statement is today, how do you know where to go tomorrow? Stay tuned and listen to this amazing video on on personal financial statements. Hey, we're here today, and I'm going to talk to you about personal financial statements, PFSs, as we see down here. A PFS, I've heard them called many things. Personal financial statements, personal financial strategies. What it is it's you telling you where you are in your financial life. I never did a personal financial strategy until about 10 years ago. 10 years ago, I got into doing some things in real estate, and I had to create myself a personal financial statement because when you start to get into buying things with large amounts of money, the bank's going to want to know what assets you have and what liabilities you have. Robert Kiyosaki talks about personal financial statements. Every time you buy a car, if you buy a car, anytime you buy a major item, purchase, right? You're going to do a personal financial statement or a PFS. And you may not realize it, but if you buy a house, you're going to do one. If you buy a car, you're going to do one. On little items, they don't really care. When you get a credit card, they're going to do a personal financial statement. They want to see if you have the qualifications to purchase that car. Now, they have their own criteria for deciding whether you qualify or not, but in essence, they're doing a personal financial statement. I'll give you an example on buying a car. When you go buy a car, they're going to ask you, how much money do you make? What credit cards do you have? They're going to ask you, what they're going to do is they're going to pull your credit. And that credit pretty much tells you everything about, it's already a personal financial statement kept for you. It's going to have all your credit card information. It's going to have all your liabilities, things that you have, how much, they may even have, how much money you make. So you're going to tell on there that it's just that they're keeping that information on you. So what happens is they put together and they decide, does this person qualify for the car, automobile that they're going to buy, and how much of an interest rate should we give them based on their credit? That they're doing is they're building your personal financial statement. Of course, they always say that we can't give that information to you because it's proprietary, and you can order that stuff, and that's fine. When you buy a house, you're going to do the same thing. You're going to fill out a bunch of documentation, and they're going to decide whether you qualify for it. Now, the difference is your idea of qualifications is usually may be very different from their qualifications. Most people want to buy as much house or as much car that they can get. So they're following their qualifications. When you buy a house, let's say a house, I think what they say is 3 times your income, right? So if you make $100K a year, you can afford, this is what they say, the bank, a $300,000 house. Right? And they're going to willing to loan you on a $300,000 house, depending on the quality of your credit, is the interest rate that you're going to get. Do you really need a $300,000 house? That's up to you. Most people go out and like, well, I want a $300,000 house. This has to do with keeping up with the Joneses. Maybe a $150,000 house is what is all you need. So the first house that my wife and I had, we went out looking at all sorts of houses. We looked at, this is back maybe 10 years ago or 7 or 8 years ago. We looked at $150,000 houses. We looked at $200,000 houses. We looked at $300,000 houses. We looked at $350,000 houses. And we just kept upping and upping, upping. And finally I decided, you know what, if I can't buy what I want, I'm just going to buy a rent house. And we're going to fix that thing up and live into it. So the first house I got for us, I think we paid $87,000 for it, put in $40,000. So we're $40,000 into it. And we were into the house for maybe we'll pick 140,000. The house was worth 140,000. Could we afford more house than that? Yes. In fact, I remember sitting down with, when you start to make some money, you'll get assigned a personal banker. Personal banker says, you know what, if you have any questions, just come in and visit us. We want to help you out. We, not some 1-800 number. So we made a decision to go visit this personal banker. So they were going to introduce us and get to know us. So you go sit in their office and they start to ask you a few questions. The question was, how much house do you own? Or what kind of house do you have? What do you have? You're just trying to figure out what we are. And I said, well, we just bought a house for $87,000. We lived it for about 1 year. We're into about $140,000. He goes, what? With the income you make? Oh, you should be living in a bigger house. You need to get a jumbo loan, which really upset me. Who is him to tell me what I have to get? We may qualify for that big loan, but does that mean that what we really want? So you got to realize that when it comes to buying houses and cars, the person on the other end is receiving something for that, usually some sort of compensation. And that banker was thinking, if I can get them into a jumbo loan for $300,000 or whatever it is, $400,000 and $500,000, I'm going to get a 1%, 2%, 3%, whatever it is, commission on that. And he's going to go take his next family vacation. So what they want to do is have you have the biggest thing, get the biggest thing you can afford out there. Well, we didn't need that, so we didn't get it. And we decided to wait, and we eventually a really nice house fell in our lap, and we didn't have to do that. People are out there, and they are after your money. They look at you as a mark, and they want you to come out and go buy the big. You deserve the nice new car. You work so hard. You deserve a bigger house. You deserve all those things. The reason you deserve all those things is they want you to think that so that they can have their lifestyle too. So it's up to you to decide, what is it that I really can afford? So what you're going to do is you're going to create your own PFS, personal financial statement. Most people are going to have a very simple personal financial statement. Most people have a job, which equals some sort of income. Maybe they have 2 jobs in the family, both husband and wife are working, so that equals some sort of income. They're going to have some expenses. Cars, mortgage, children expenses, child expenses, school, whatever. There's some major expenses that they're going to have, and they're going to have credit card debt. Right? So you're going to have all those things. Hopefully you don't have any credit card debt. If everything's good, you've got an income, your cars are paid for, you've got no mortgage, your child expenses are going to be something that's there. You're going to have expenses on your house, such as insurance. You're going to have to pay taxes, those things which you can't get rid of. And you're going to have credit. Hopefully you won't have any credit card debt. Excuse me. That will be most people's PFS. And then whatever's left over is, your how much your net worth. The reason you don't have to fill out very many of these is because it's very simple. It could take 5-10 minutes to do this. But if you want to get in the big game of buying houses or having multiple houses, multiple things, apartments, in businesses, you're going to start a business, you're going to have to start to create more of a personal financial statement. And usually that includes things like even jewelry on there and stuff like that. And what they want to do is they want to figure out what is your cash flow income coming in and what's going out. You may have $1 million sitting in the bank and go out tomorrow and buy a $200,000 house, and it drops down to 800,000. Then maybe you're gonna finance half of that, some of that money out of there to get that back, and then you're gonna rent the house, or you may fix it up and sell it. Who knows? It's a form of cash flow. You even have to think about it, your tax implications, your tax implications in that. Because sometimes you have short-term hold and long-term capital short-term capital gains, long-term capital gains. But in essence, you're going to have to do a PFS. And what I found is that when I was buying up real estate, is that a lot of times you've got to be ready to go like that on a deal, and you need to have this thing taken care of. So maybe every month you'll be updating your personal financial statement. And the more assets and liabilities that you have to deal with, primarily assets, because how many liabilities can you really have? It's just going to be stacking up credit cards. If you have more and more assets that are cash flowing, it's going to make everything a little more complicated. You may be buying and selling assets and building things. You might have 5, 10 assets, and then next year you'll have 7, and then next year you'll have sold all of those. You might have bought something different. So your assets will change. And every month you have to take a look at that and take a look at the money you have in the bank. And that's how you maintain your PFS. For most of you, the simple PFS, I'll probably figure out how to get one to you guys if you want to download one or whatever. But it's usually something that's very simple. I remember one time that I sat down with one of my friends and we decided we were going to fill out our PFSs. And this is before we had anything. I had anything. And a lot of times people have no idea what's happening to their money, and a PFS is going to tell that to you. And a lot of times people, they may not even want to fill one out in front of their spouse because they know that they've been lying to themselves about what's really going on in their financial life. Sometimes you may have to do this in private. But I remember what my friend said, and he started filling it all out. I made, $60,000 a year. I've got this expense. He said, man, I got nothing left over at the end of the month. See, he didn't really even know he was upside down. And so PFS is going to tell you where you are financially. And until you know where you are financially, you have to have a starting point to know where you're going to go. So it just depends on how complicated your life is, depends on how often you have to update it. If you just have a house and a couple of cars, you may only have to update it once every year when you get a raise. But if you're buying and selling things and real estate and stuff like that, you may have to update it monthly. Typically, the worst thing you can do is when something comes up, you'll have to scramble, go find your personal financial statement, and then sit down and think about what you got. And you don't want to have to do that. Because the first time you do the personal financial statement, it could take you several hours. Just to update it, a lot of times it's just looking at it and adding and subtracting a few things out of there may take you 5, 10 minutes. So that's what the importance of a personal financial statement is. Okay? So, and it's very, very simple. And it's like a habitual thing that for you to put together. So go ahead and look at putting together a financial statement for yourself. And can maintaining it every month. I keep one. I even keep my old financial statements. And what I've done is go back and look 2 or 3 or 5 or 6 years ago or 10 years ago, and you'll see how drastically your life has changed or not changed. Oops, that flipped upside down. If you don't like the way your life is right now, your personal financial statement is going to say something like that, and you'll discover that. The worst part is if you don't like the way things are and you don't know it. Start building your personal financial statement so you can build your financial future. We'll talk to you later.